Three, two, one, blast off. Ladies and gentlemen, welcome to another episode of the MSP Chat Podcast, your weekly visit with two talking heads talking with you about the services, strategies, and success tips you need to make it big and manage services. My name is Rich Freeman. I'm the Chief Content Officer and Channel Analyst and Channel Master of the organization responsible for this podcast. I am joined this week, as I am every week, by your other co-host, our Chief Strategist and Channel Master, Erick Simpson. Erick, do you notice anything different about me?
I do notice something different about you, Rich. You look like you're much more relaxed and chill than I might normally expect you to be with your amazingly busy schedule. What's going on?
Well, shrewdly observed, sir. We, as our audience knows, we went dark for a week there. I am entirely to blame for that. I was on vacation, spending the better part of a week on a beach in Greece, sipping cocktails and eating way too much in the evening. And yes, it was extremely relaxing. And so, yeah, it's good to know that is visible here. But I'm super excited to be back and back at it, Erick.
And we are super excited to have you back, Rich. Awesome. Welcome back. We're back at it again, everybody.
All right. Well, thank you very much, folks. Just so you know, coming up on the show a little bit later, speaking of super exciting things, we've got an interview coming up with Craig Fulton of Evergreen Services Group, formerly of ConnectWise, also Peter Melby, CEO of New Charter Technologies. These are two extremely informed people on the topic of mergers and acquisitions for MSPs, and we're going to have a really interesting conversation with them coming up. But for now, let's dive into our story of the week, and it comes to us from Sophos. As we are recording this, Erick, Sophos just published their 2024 MSP Perspectives Report. It's an annual look at the managed services marketplace from those folks. Lots of interesting data in there, as you would expect. There was data about three particular trends going on in the MSP world that I kind of wanted to call out here a little bit and just chat about with you. Partly because some of these we've spoken about on the show before, starting with vendor consolidation. We have observed on this show, based on data from IDC and from CompTIA, that MSPs are looking to streamline, reduce the number of vendors that they work with. And there was some interesting data on that from Sophos. 53% of MSPs already, so they're reducing their vendor relationships. 53% already are working with one or two cybersecurity vendors. 83% are working with 1 to 5. So it's obviously extremely rare for MSPs to be working with more than 5 cybersecurity vendors, and it's going to get rarer still, I think, going forward. Another interesting data point, closely related to the first one, is around tool consolidation. So MSPs are reducing the number of vendor relationships that they're managing, but they're also looking to consolidate their cybersecurity tools, and not even just their cybersecurity tools, but just the tools that they rely on to serve customers. They're looking to get more and more of those products from fewer and fewer vendors. For example, even though Sophos is not in the RMM or PSA business, they asked MSPs, how satisfied are you with your RMM or PSA tool? 74% of MSPs who get their RMM software and their PSA software from the same supplier described themselves as very satisfied, versus 43% of MSPs who are getting their RMM software on a standalone basis describe themselves as very satisfied. 40% of MSPs getting isolated PSA or standalone PSA from a vendor call themselves very satisfied. So clearly MSPs prefer to get both of those products from the same company. And there is there's more data in there that kind of points to the thinking behind results like that, specifically in the realm of cybersecurity, when MSPs were asked to estimate how much time that they could save by consolidating all of their cybersecurity solutions onto a single platform. 48% estimated that if they did that, it would save them significant time. So, from an efficiency standpoint, from a satisfaction standpoint, a user satisfaction standpoint, MSPs are looking again to consolidate tools with more and more, or get more and more of their tools from fewer and fewer vendors. Last but not least, and I found this kind of interesting, Eric, they went out to MSPs and asked them to identify the both the MSPs and the MSPs clients. What are your biggest security related risks? And both the MSPs and their customers said number one on the list is a shortage of in-house cybersecurity skills, which is interesting. I mean, obviously there has been a skills gap in the managed services world for a long time. If you look at some of the data from CompTIA in recent months, we can see that tech industry unemployment rate is actually going down a little bit. It's getting a little bit easier for MSPs to hire. But apparently, it is still very, very difficult to hire specifically for cybersecurity. And I'm actually going to be writing a blog post on my blog channel, Holoc, about this. By the time people are listening to or watching this episode of the show, this will be out there. There is a massive skills gap. 4 million. We need 4 million more people in cybersecurity than we have out there right now, and yet very relatively few, a very small percentage of cybersecurity professionals in the industry right now are women. So it is interesting to see that both MSPs and their customers identify a shortage of skills, lack of access to skilled security personnel as their single biggest risk. And yet there's this giant pool of potential talent out there that's sort of being underutilized. We need to get more women into the industry. So I threw a lot at you and at the audience there, Eric. What kind of jumps out at you about any of this data?
Holy cow, Rich, so much, right? So much. So I'm trying to compartmentalize each thing. So I was not surprised at the demonstration or the confirmation from the survey respondents that the MSP channel, this being a representative sample of the MSP channel, are trying to reduce what I call platform sprawl and vendor sprawl. In fact, the majority of the work that I've been doing for a long time has been working with MSPs to look at their options in consolidating and reducing this platform sprawl and, of course, vendor sprawl. And not for nothing, Rich, but I'll say that, from a cybersecurity tool set perspective, we've talked about this on the show before as well. Microsoft is definitely making inroads into, creating and delivering cybersecurity focused services with their M365 and other add-on licenses, very competitively priced, some included with some of the existing licensing and some for, just an additional small uplift for an additional license to give end users broader cybersecurity protection. And so I've been really analyzing that. And as a result, have seen Microsoft making inroads and displacing other traditional cybersecurity vendors in working with these MSPs. So I can definitely attest to that. But just in general, the other point, Rich, that I find to be true more often than not is that MSPs, at a certain level of their maturity, are all about helping. Let me rephrase that. All MSPs are all about helping their clients, but at a certain level, we may take on too much and just add it to our stack. For instance, oh, this is a great solution. It's only $1 or $2 more. I'm just going to add it to my stack that I'm delivering to my existing clients, and failing to charge for it, or failing to, describe the value proposition and getting the clients to say, yes, I want that and more stuff, right? So there's been that kind of impact on these MSPs thinking, oh my goodness, I've got to control some of the sprawl, or either I've got to start charging more for it, or I'm looking at, all of these vendors and their solutions, and what can I do to make different decisions that maybe there's a vendor or two that can cover most of what my clients need, rather than trying to go for the best of breed from each different vendor. Like, I need the best penetration testing solution, so I'm going to go with this one. I need the best of this, I'm going to go with here. I think in that scenario, Rich, what I would encourage MSPs to do is say, well, look, you can have a good, better, best, portfolio of services where you do have like the best, you have the luxury vehicle on the lot if a client wants to buy that, and then you can charge for that. But for the majority of your folks, maybe your standard stack that is, less complex, delivered through more consolidated platforms, leveraging less vendors, makes more sense. And it doesn't have to create such a big budget discussion when you go to market. So those are the kinds of things that I was thinking about from that part of the analysis, Rich. The other thing, that you really touched on is this, this dearth of labor, and this number of, the gap between the opportunity for cybersecurity experts and MSPs, the need, and how many people we have that are ready to deliver those services keeps growing every year. I remember, last year the number was less than 4 million, and the year before that it was less than 3 million, right? So it keeps increasing. So we do have a big challenge, and we do need more folks and underrepresented folks, to join us. So I'm wondering, and I know that, you've talked before, Rich, about, programs and things like that. I think, CompTIA spearheads some things like this. I think there are other vendors that spearhead programs to help accelerate the training and certification specifically for cybersecurity services and solutions to try to address this gap. I just don't know if we can get there fast enough.
Yeah, which is a very good question, actually. And again, that gap between the number of trained cybersecurity people we need and the number we have is at 4 million. And you're absolutely right. It hasn't grown every year, but when it goes down, it doesn't go down nearly enough for anyone to feel like, oh, this problem is going to be solved anytime soon. So yeah, there are training and enablement programs out there. In addition to CompTIA, there are other organizations that are trying to get people into the industry, get them the skills they need to fill those positions. But we also really just need to be casting the net wider and just working harder to pull people into this industry. And some of what I'll be writing about in this blog post, I was kind of hinting at, and this I'm going to be writing specifically in the context of women, but it applies to men too. Basically, it's sort of helping people understand what's involved in working in the cybersecurity industry. There's this image of somebody in a hoodie in a darkened basement somewhere, typing obscure code and so on. And there's a greater range of jobs in security than people realize. You don't necessarily need to be technical to hold a lot of those jobs. Some of these positions are very analytical and not very technical. We just kind of need to create more awareness about that, work harder at that, and then, yes, funnel people into these training programs. The other thing, just on the vendor consolidation and the tool consolidation, before we move on, I'll just kind of quickly point out, because there are some lessons in there for MSPs and for vendors. On the vendor consolidation side, to the extent that MSPs are working with fewer vendors, MSPs need to kind of keep in mind, and vendors need to keep in mind, that means vendors need to have a more competitive offering for those MSPs. You're going to be working harder to attract and retain MSPs if they're not maintaining relationships with as many companies as they did before. So keep that in mind. It's going to be a competitive landscape for you as a vendor, and keep that in mind as an MSP. You've got a little bit more leverage to the extent that marketplace is competitive. And then on the tool side, this is maybe more for the vendors than the MSPs, but precisely because MSPs want more tools from fewer companies, you need to be thinking platform, not product. You need to be kind of looking to particularly in security, you need to be building out a wide-ranging portfolio of tightly integrated solutions so that you're prepared to give MSPs what they want, basically, which is that consolidated tool set for all the reasons you were kind of talking about, Eric.
Yeah, Rich, and I will double down on the phrase you used, tightly integrated. We see some vendors out there that are just making a bunch of these acquisitions and then kind of rebranding everything and selling it as a bundle. We really want tight integration between these disparate platforms. If they're being, acquired through purchasing other IP or companies, I mean, we want integration. We want single pane of glass. We want simplicity in analyzing and assessing everything without having to jump into a bunch of different windows. We want the ease of being able to invoice and bill our clients without having to do too many, backflips and somersaults, all that. And all that points to streamlining the experience for the technicians using the platforms and the MSPs that are investing in the platforms, and the ability to leverage that with reporting and adding value and not spending so much admin time and between, what do they call it, in between time, jumping from platform to platform or screen to screen, and then having to do a bunch of manual stuff to make it all seem like it's a consolidated deliverable to our end user clients.
Well, all right, let's move on to your tip of the week for this episode, Eric. And so clearly there are a lot of MSPs out there rethinking their vendor relationships and their tool stacks, but you'd like them to rethink maybe something else as well.
Yes, Rich, you are absolutely right. I want MSPs to rethink their target audience. Is your target audience the same target audience from when you started your MSP practice, or is it different? We know, Rich, that a lot has happened the last several years. We point a lot at the pandemic and the way that everybody had to scramble. Businesses, the MSPs that supported them, MSPs that found opportunity now where there was none before to do co-managed IT because internal IT departments were caught kind of flat-footed in supporting hybrid environments and security and all that. And now, is your target audience the same? Are they buying and investing in the same services and solutions? Are they in the same industries? As you migrate to delivering more cybersecurity focused services, maybe compliance services, I got to believe, Rich, that this has caused a shift in the target audience. And I want everyone to think about being intentional about evaluating it. Do I still want to attract the target audience that I was attracting 5 years ago? Or am I attracting a different target audience? And if so, maybe I'm doing that. Maybe I've agreed to do that. But is that reflected now in my marketing, in my messaging, in my website, in my sales process, in my leave behinds? And am I focusing more deliberately on those target audiences, whether that is a vertical specific focus or whether that is, a different geography or something else, or because I am now trying to fill that skills gap and opportunity by focusing more deliberately and leading with cybersecurity, which also forces me to rethink and recreate my entire messaging and website and social media and how I'm presenting myself and my organization to my prospects, Rich.
And one of the huge storylines, pandemic and post-pandemic, has been the increased interest in managed services from larger businesses and the co-managed IT opportunity and so on. There are a lot of MSPs out there that have adjusted their target audience specifically because for those reasons. But like you said, there are a whole bunch of different reasons basically why the market various MSPs serve has changed in recent years. And I think the key point that you're calling attention to there that's so important is making sure that your sales and your marketing and your messaging and your website reflects that. A lot of what you're doing day to day, a lot of your processes, those have, necessarily kind of kept pace with your changing client base and what it takes to support those people. But it's very easy to lose sight of the fact that the messaging, and the marketing programs and the marketing tactics you were using before that made perfect sense for whoever it was you were selling to previously, maybe doesn't work for you anymore. I'm with you, Eric. I think it's a smart thing to take a good hard look at who your target audience is now and periodically going forward, and just kind of make sure that everything you are doing, sales and marketing and beyond, is aligned with who you are supporting, selling and serving and supporting.
Yeah, Rich. I mean, and one of the things that comes immediately to mind is your website. Is your content and copy written to attract that new or evolved or different or distinct target audience that you're going after today? Are you optimizing for the keywords that these folks are searching on? Just simple things like that kind of get you thinking. So just get a checklist out and start thinking about everything that you need to review in order to make certain that the folks that are being attracted to you and you're doing business with are actually the target audience that you want to serve.
Okay, well, we are going to take a quick break right now. When we come back, as promised, we will be joined by Craig Fulton of Evergreen Services Group and Peter Melby of New Charter Technologies. These are two of the most informed people you could possibly hope to hear from about the current state of M&A and the managed services landscape, and we will be getting into that with them in just a few moments. Stick around, folks. We will be right back. All right, everybody, welcome back to part 2 of this episode of the MSP Chat Podcast, our Spotlight interview segment. And folks, Eric and I are super excited. We have got a power panel for you here. We're going to be talking about the merger and acquisition landscape in the world of managed services right now. And we've got two people who know this about as well as anyone else in the industry out there. They are Peter Melby. He is the CEO of New Charter Technologies, and Craig Fulton, who will be familiar to any ConnectWise partners out there in the audience, former C-level executive at that company for many, many years. He is now an advisor at Evergreen Services Group. We were just talking off the air. Eric and I are fortunate in that to the degree that Craig and Peter are kind of sort of competitors, looking out for, high quality MSPs to purchase and bring on board. It's a good thing that we are not in the crossfire, Eric. Here. If there are shots fired, we are safe from those, but not anticipating a whole lot of that. Craig, let's start with you. For folks in the audience who don't know you and certainly don't know Evergreen, just introduce yourself.
Yeah, I'm Craig Fulton. Like you said, longtime ConnectWiser, 30 years in tech now. I feel what is pretty common for a lot of IT service owners out there. I was a tech, had certifications, and at one point I thought I'll try and do my own thing. And that's when I met David Bellini, and he had an MSP called ConnectWise in Tampa. And that's how I got in there. For 2 years, I worked at ConnectWise as a field engineer, network tech, and met Arnie, jumped to the software side, met a lot of IT service providers, helped transform into MSPs. And when my time was up with ConnectWise, it just felt like the natural part of my journey was, hey, those people that I helped as managed service providers, let me help them with their next stage in their journey. And I met the folks from Evergreen because a friend of mine sold his business to them. So here I am now, and I just, spreading the word about Evergreen, what we do, and going head to head against Peter as much as I can.
Yeah, just at a quick high level, I mean, what you guys do, you are a private equity firm, you are acquiring MSPs, but a slightly different model in terms of what you do with those companies once you purchase them, correct?
Yeah, and this is great. Again, being with Peter and New Charter, our models are very similar. But I'll just point out the differentiator. We're a holding company at Evergreen, and think Berkshire Hathaway, Warren Buffett. We buy businesses and we hold them forever. We have no plans to ever sell a company. We've never sold a company. We think that's our unique advantage that gives us a longer runway on things. But yeah, we buy MSPs. We operate in several industries, but MSPs being our biggest one. We've gone global this year. We're in North America, UK, ANZ. Always looking for great MSPs out there.
So Peter, your turn. Tell folks a little bit about yourself and about New Charter.
Yeah. Craig, did they tell you I was coming? Because they didn't tell me you were coming. They just showed up. I just showed up. So you're here.
I didn't know.
What?
I didn't know.
No, I'm kidding. I love this. I think that, I'm the CEO of New Charter Technologies. I joined the platform a number of years ago and recently took the CEO chair from our founder, Mitch Morgan, who had this idea of building something that really flew in the face of a lot of the experience that most MSPs had when they sold their businesses. And so a lot of the assumptions, about us, and as Craig pointed out, some of the differentiators, we're a bit more than a holding company. We're looking at how to build this from the standpoint of the customer and the employee, which are typically the two first casualties when a company gets acquired, by just, a consolidated roll up in the market. The employees lose their home, and then the customers look at it and say, well, if my team's not there, I'm going to go find something else. And so you see a lot of attrition. I think we've all, a lot of MSPs have been party to things in the market where a competitor gets acquired, and it's great for us. We get the employees, we get the clients, and it doesn't go well, for the selling entity. None of us wanted to sell our businesses into that fate. And so what we're looking at doing is, how do we build this platform, which which you can trace back to, slower integration points, maintaining entrepreneurial autonomy in our local markets. We operate, underneath legacy brands. We really focus on the employees and then ultimately the client experience. And but we're also then working really, really tightly together for how we deliver experience and create value at scale. So it's we're definitely more purposeful than just bringing the organizations in, but looking at it through that lens of the customer and then the employee.
So you guys, you spend a lot more of your time looking a lot more closely at the M&A environment for managed service providers than the typical managed service provider does. I'll give each of you a chance to comment, starting with you, Craig. Big picture, just to kind of kick things off, what is the state of the M&A market right now for MSPs?
Yeah, that's talked about a lot, right? There's this talk about it's been slowing. And it could be because, and you have to remember there's a lot of different ways to do M&A. One MSP can buy another one. A platform could be buying more in. Private equity could be buying a bunch, putting them together. You could have New Charter buying, bringing them in, Evergreen bringing them in. Some of that style could be slowing because interest rates go up, right? But when an MSP is buying another MSP, they got to go get a loan, right? Typically a bank loan. That's going to be expensive. But when it comes to private equity backed, you typically have a lot of capital there. So, certainly for Evergreen, it's not slowing for us. We're actually doubling down, putting the pedal to the metal, increasing our team to go find more MSPs. I do feel there's a big future, and bringing MSPs together, you get a lot of benefits out of that. As Peter was saying, you get a lot of operational maturity, right? When you have a company of this size, an organization, you attract talent at another level. It's like you're getting MBAs, you're getting people with big level experience and building big organizations that come in that this industry typically hasn't seen. And that helps the whole industry grow too, right? Because now you're extending that reach to more SMB businesses to provide tech support for, but then you're also breaking into that large enterprise, which we're seeing a lot of, driven primarily by cybersecurity. But yeah, that's kind of where we're seeing it right now. But I think companies like ours, we're still going. We're not challenged with getting capital to do deals. But it's gotten harder, I think. Maybe it says there's a lot of noise, right? I get people saying to me, "You're one of 30 people that message me a day," and that's why but I'm different. I try my best, but it is really noisy in North America for sure. People are being bombarded, and you got to figure out a way to stand out. And but there's a large number of companies that are ready to sell because of just the demographic of the founders and owners.
Yeah, I think it's interesting because capital's not our challenge either, and finding quality companies that both are at the right time frame, fit our model, and have the right investable economics, is really the biggest limitation that we see. If we can, any company that we find that matches those, we're in. Do they fit what we're doing? Are they at a time when it makes sense? And of the 25 acquisitions that we've done, 23 of them weren't on the market. They weren't for sale. They looked at this as an early opportunity to transition into something that was more exciting, more opportunistic. So yes, there's a lot of noise. Weeding through it is one of the hardest things. And the other part of it, and I think Craig, you guys experienced this too, is that one of the reasons why I love companies that are not for sale is that we don't want to bring on something that's specifically just contorted, in order, for a moment in time to transact, with perfect economics, but the reality of the operations is really poor. We have to find success on the other side. I think we've all seen the stories and heard the stories of the organizations that, were perfectly built, for acquisition and not for continued success. So much of the scrutiny is not even about getting people to respond to the emails or anything like that. It's about digging through what it looks like on the surface to find out what it's going to be like in reality.
Peter, and that's a great point. I've been involved in 7, M&A deals now, and in every case, they weren't actively looking, right? It's like you came along, had a good value statement, and it aligned with where they were, and they thought, all right, let's go through with it. So I think you're right. And that's not saying they're all that way. But I think a lot of people think that everyone selling is preparing and doing all this work, and that's not the case every time.
Yeah. It's funny. I think back, I founded an MSP over 20 years ago. And so I've lived my life in this industry. I don't think hardly any of us came into this with the idea of enterprise value, even being on the table. Like it was, how do I have get a job in this new industry that you don't need education for, you just got to be good, and curious and all of these things. And so it's this frontier. I think most MSP owners, thanks to the experience and what's happened, and organizations like Evergreen and New Charter are significantly more aware of the enterprise value opportunity, in what's been created, but they haven't always prepared for it. They don't always understand it. And sometimes it gets a little bit oversold, in that too. Like no investor is going to invest in something that can be better afterwards than it was before, and so that's one of the things that I think, when people look at to come back to the idea of, is it slowing down or is it speeding up? It's all about quality,
Right.
Great people, and great organizations and all this, there will, as long as there's still a market for this, which that's not going away,
Right.
then there's always going to be, momentum in this space. It just might look a little bit different depending on the company.
Peter, you mentioned, quality, right? So, in my experience working with MSPs through, different M&A opportunities, and, I love the conversation from the recovering MSPs here that have worked with MSPs in a different kind of relationship, and now are helping these MSPs, either exit or or grow through acquisition, right? So the folks that we've been working with all these years are now at a point in their career where either they're aging out, to put it politely, to put it accurately, and wanting to, reap the benefits of all their hard work building their companies. And then others are like, no, we're going to try to, join a bigger organization like what you both provide, or they're doing it on their own. So from a buyer's perspective, what are the key metrics that you both look at in terms of, making an offer to an MSP? What makes an MSP attractive? There's two-part question: from a metrics perspective, performance metrics, and then I'll follow that up with, okay, beyond that, what are the business qualities that buyers are looking for? So, guys, jump in.
Okay. I'm making Peter start this time.
Yeah, that's fine. As I was being polite, but I won't be polite anymore.
Rochambeau, let's go.
But that's what we do for companies. So, so obviously the biggest metric when it comes to the investment valuation in this industry, is EBITDA. But I think that if you look at, what is most attractive and most interesting, to us, the first thing for us is growth. The ability to understand how to grow, organically. And most MSPs, even, $5, $10 million MSPs, sometimes the growth isn't necessarily the most sophisticated, or programmatic. But the first part of growth is, do you matter in your market? The second part of growth is, do you have, relationships and connections in your market? And those things are hard things to replace from scratch. We can put in good, sales processes. We can, enhance things, but do they have, the position in the market where they're the most valuable? And organic growth is, a significant, pointer there. So from a metrics standpoint, it's the first thing, that we're looking at. Then obviously the ability to operationalize that into a profitable business is what you're going to get paid on. The thing that I think from an operational perspective, we're always looking at what the business looks like after the transaction. And that ultimately is the decision point about moving forward and what it looks like. There's the profitability is the number, but the investment is what's happening in the future. So we always model that out. We always look at what coming into our platform will do, to enhance growth, to create economies of scale, which parts of things we need to make sure that we don't touch, so that the soul of the company remains intact. All of those pieces. So that's, for us, it's growth, and then just modeling out what the reality looks like once it's done.
Yeah, for us, again, similar new charter. When we buy a business, we don't rebrand it. We don't change the people. We don't change customer systems. We give autonomy and power to our companies. We do, leadership training and planning put in there. The reason I bring that up is there is a set scorecard that we use internally that we value a business because we're going to be holding it forever. We know going into a deal how long it's going to take for us to break even and really start to get full cash out of the business. So similar to what Peter's saying, valuations are driven off EBITDA. We got to really dig in and understand what are the adjustments there, what are things running through the business that won't once a deal happens. But there's really 4 key things. I feel like it's what's your revenue, what's your EBITDA, what's your percentage that's recurring revenue, because that's really what makes this industry so juicy. And then there's the customer concentration. That's a big one, because that's something that is an issue in our industry, because a lot of MSPs, IT service providers, have grown up with customers, and sometimes they grow parallel. Their growth and they stay similar, and all of a sudden that one customer becomes 30% of the revenue. That's a high risk. That's going to be a hard conversation to get through. We like to see businesses that are, pretty diversified and revenue across the customers, but there's qualitative things. We want to look at the leadership team. What's the tenure? Is there finance in there. And as what Peter was saying, growth is an important thing. A business is very attractive when it has a growth engine. Is there a business development person there, a sales rep that's driving growth? Because any investor is going to think, how much investment am I going to have to make in this business once I acquire it to grow it? That's going to be hits on valuation for sure. And then you can dig deeper. There's retention, and that's, gross retention, net retention, like how long the customer's sticking around. What are you cross-selling into them? And contracts, it's important to take a look at the contracts too. Like, unfortunately, acquiring MSPs is not as easy as going on Zillow. Oh, cool. 3-bedroom, 3-bath MSP. Yep. It's worth this. It's not that. Every deal is unique, right? That's what makes us even harder to find good quality businesses. You're spending a lot of time digging in, and there's so much someone has to think about, but it really, I'd say just start with those core 4: revenue, EBITDA, percentage recurring, customer concentration, and then growth engine. Is there a finance person in the business, or is that a fractional or outsourced thing like that? There's a lot to be said here. We could be here for days. So yeah.
So this is great feedback, Craig and Peter, and I think it speaks to the operational maturity level of a business, like some of these key points. I'd like to ask your perspective on, we know that probably the number one financial metric that we're looking at is, the percentage of EBITDA that an organization generates. And then, there's a multiple of value that's applied to that. But, and then there's these kind of, business qualities that we add to our scorecard. What about the different revenue streams? Mm-hmm. How much of the different revenue streams impact your offer in terms of, hey, I'm skewing, you mentioned, Craig, higher percentage of MRR that's managed service agreements.
Yeah.
What about SaaS? What about like break fix labor? What about project labor? And how you look at that and how it impacts your ultimate offer? Or do you have a separate kind of a evaluation that says, okay, well, let's break down, there's like 5-6 primary revenue streams, and each one of these has its own multiple, and some are very less valuable to us than others. How does that figure into your valuation processes?
I'll go first because, man, I'm living this right now. I'm looking at financials is like a full-time job. When I got in this, I didn't think I would, but I fell in love with doing it. It's actually really enjoyable. Obviously your straightforward managed services, very valuable, right? Like your traditional end user, endpoint, cybersecurity, Office 365, the cloud subscription stuff, that stuff's great, right? Because it has low risk. It's contractual, and you can do some predictability on that. Things that become tough are private data center, right? And right away, it's what's the capital expenditure on that? What's the CapEx it's going to cost to keep that going? And then truthfully, what's the long-term future for private data centers? When you see a lot of that drives value down in a business. But, I'd put it into 3 things: recurring, reoccurring, and then your one-time ad hoc stuff. And the reoccurring, that's your professional services work that the customer comes back for. It's not recurring in nature, like on a timeline, but I know they're going to be back 2 to 3 years. We're going to do project work. There's value in that. We need to see, anybody is going to want to see that there's something happening there, that the customer stays engaged. And then the ad hoc work, hopefully that's a smaller percentage, but that's also good to see too, because that could be a feed for future managed service customers. Yeah, Peter, I would love to hear additional. I could keep going, but
I think the basics are very similar to it. For us, we're looking at it from the standpoint of what's the trajectory of the services. and what's the sustainability of them, and then how do we bring that into other areas? Is there opportunity to bring certain things into other areas of our markets? And when I talk about being a platform and what we're working to build, like first step is, take these businesses and, we've got a mantra in some of the areas where, step one is DFIU, and you can figure out what that stands for. But so don't interfere with, with what's working. But second, it's then how do we take this and build more value into it? And some of that's building value across, so we don't mess up companies that we bring, but then we can take the things that come from what, that are unique about one market. So if we've got DevOps services, if we've got, deep analytics and business intelligence, that can come into our other markets, then there's a lot of value creation there. So, the trajectory of services that are maybe fading, private cloud is one of those that, we by and large are not working to compete directly with Microsoft, on things. There's still a place for it. Absolutely. It's just not what it was before Microsoft had this, dominant impact. So we're evaluating those things. Now we typically are going to go line item by line item and say, well, this dollar is worth this much and this dollar is worth this much. It's more of an overall profile of the business and what that modeling out, in the future is going to look like. We're very, very focused on building, continually modernized IT, and so if we're looking at a company that's really stuck in, 2005 and this is the dirty secret that people IT companies hate change more than sometimes, everybody else. As much as we're in the technology business and technology changes all the time, it sucks to reinvent your business every 4 years because of what's going on in the technology world. So there's a lot of legacy space and a lot of places where it's actually the MSPs that are holding the customers back, from a more modernized experience. We're working to build that. So we're going to peg where they're at, in their own modernization journey, as part of that process, and look at the overall profile. In addition to all the individual metrics as far as recurring and reoccurring, it's really comes down to what foundation we have for to build something better for the future.
All right, Peter, I gotta ask you something. and you're right on the. I would clarify on the private data center. There are times that, typically government contracts are going to be like, it's got to be in this. But what's your take on voice over IP, managed print? Like,
are we heading down the path of hardware resale? Just pure hardware resale.
Just pure hardware resale. Look, we see value, in it. And one of the things I think, Craig, that lends itself to both of our models is different markets are at different levels, and we see different things in the Midwest than we see,
right,
in Manhattan, things like that. And so there's different life cycles, in spaces. So yeah, some of that stuff that we're looking at has become ultra commoditized, in some ways. That used to be like, if you were a VoIP expert and you could figure out quality of service issues over a DSL line, like you were golden. Like that doesn't exist as much anymore with big, open pipes, unless you're in a rural area that doesn't have that. Or one of the things that we look at is there's an imbalance between the rural areas that have significant broadband access and those that don't yet. There's tremendous opportunities there. So I say it's really nuanced, but I will say that we're not looking to invest in companies that are wholly banking their future, on these types of things.
And I'd love to add one more thing on that. Sorry, Eric and Rich, but you're right, because in Australia, New Zealand, that infrastructure was behind, right? Yep. They, Azure and AWS have recently really just shown up there. And so you will find businesses down there with private data centers, and that's okay. It's just, what's their trajectory like moving off of it? But it reminds me of one funny story. When I was with ConnectWise, I visited an MSP north of I-90 in Chicago, cutting edge, high speed tech, all this stuff. Seriously, 2 miles on south side of I-90, it's like we have a 5 meg internet.
Yeah.
You're right. Like there are those things that are just things, that you just have to be aware of.
Now, eventually that's going to change, and everybody will have, some level of, significant broadband access. And we're already seeing that. It's definitely the minority that don't, right now. And, but I think that those are the things that we have to pay attention to that are going to change at a much more rapid pace. And that's going to impact our businesses moving forward. Like, these businesses have to be, their capability for change and adaptability to the future is not typically what they're valued on, but that's what we're going to live with, and that's what we're going to be doing. And that's where, one of the big parts of our model is that we're looking for entrepreneurs who want to continue their entrepreneur journey for a season, or longer in a different way, as part of that. So they're actually going to bring in what they built, and adapt it to some of these, these modern pieces. And so with that, it's not just, okay, here's the VoIP business, do with it what you want. There's some continuation in some of that. But it's the fun world that we play when all these individual technologies are either over time or just immediately less relevant, than they used to be.
I made you dance around that one. You just don't pull an Arnie at a keynote and go, voice over IP's dead.
And that was everything we heard in 2008. Remember when the MSP, the traditional model, was dead because cloud computing was coming?
Yeah, no, actually, what he said, telecom's dead, and we're all like, not saying that. We're not saying that, folks. We love telecom businesses. Let's just help you get the medicines.
No, I think honestly, you look at what we're good at in the MSP space, and then this is really what should feed future M&A, opportunity, is what our opportunities are for the future. And what we should be good at is not typically what we have been good at. And that's going to be a problem in that we have to be able to modernize our customers' businesses, and we have to be able to do it with scale. We have to be able to do, innovation, and investment. Small MSPs are not going to be able to invest at the level that we can.
Right.
And organizations that are too, they're tripping over themselves, are, with either poor, post-acquisition strategies, or, not having the right people in the right places, or not having the right level of insight, or momentum in their markets, are going to struggle, to not just be focused on themselves, and so I think that the M&A options that still keep the customer, broken record around it, focus on the customer, the employee, the entrepreneur. It's just a significantly different opportunity to create change into the future, not just, memorialize and recognize and value a company for what it is now.
So I want to actually ask you both about private equity is sort of the elephant in the room of M&A. But Craig, you pointed out rightly, of course, that another alternative for MSPs out there is to either merge with or sell to another MSP. So before we kind of transition over to private equity, I mean, what are the pros and cons of that option for an MSP to consider?
Yeah, and I've had a lot of experience with that, being at ConnectWise and watching so many MSPs go through this. Some of the pros are, you're growing rapidly, and a lot of people, there's a misconceived notion, we merged them together, we can immediately sell for this valuation. Like, you're going to need to show some organic performance first before you get the number you may have in your mind. But, the pros are, if you got two great cultures, you got two great businesses coming together, and you have the opportunity to cross-sell or share knowledge with each other, learn from each other. Listen, the obvious con is you got to integrate two businesses together, and the number one challenge with that is people. I've been down this road. Like, when I was again, I'll refer back to ConnectWise. I think we went through 16 acquisitions while I was there. People are always the hardest part. It's, and there's not enough effort put on that. I just would caution people, hey, if you're going to go through with that, not a bad thing. I'm not saying don't do it. Just prepare yourself for the level of people management, that you're going to have to do. This is definitely not something, it'll work itself out. You have to be extremely intentional. What's our go forward process? Who's the go forward teams? Who's doing this? Who's doing that? So many times when I see these mergers happen, you get the leaders in a room, they all agree upon something. One person leaves and says, I'm not doing that. That's not the way I've always done it. That's the wrong way. And then they poison the well of employees. And you get this weird us versus them that happens. And that can take a long time to sort out. Like, look, we lived that when LabTech and ConnectWise merged. It was green versus blue, and like, we're better than you, your business or tech. And, it's like, that happens in small business just as well as it happens in large business. And, and sadly, the customers, you really got to put a strong focus on that. You can't communicate enough when you're going through a merger with again, one MSP buying another. You have to communicate, keep the customers, hey, this change is coming. Obviously their bill can end up looking different. That's going to startle them. That change freaks them out. The way the emails look, the way the communications, and you've just got to communicate that. That's a big part of it, but it's hard. It's hard merging companies. I don't care if it's 2 one-person companies. It takes work, just like a marriage.
So, sometimes it's harder. It's even harder on the smaller side, because of how personal everything is. Yeah, in those organizations. And I think we often get mislabeled as an organization that doesn't do integration, because people see that that we're operating with legacy brands or markets and things like that. But one of the things that we've really focused on is what we say is integrate for value, not vanity. There are companies that integrate because that's the investment thesis, and that's what private equity mandates, and that's what but they don't really integrate. They just change their name to be the same, and then they kind of work backwards and try to figure out everything behind the scenes, behind that unified label. And I think, if again, you talk about the value chain of, customer, employee, entrepreneur, you end up with something quite different. And we say, it doesn't really work very well to get married and then go on a first date, and so the ability to actually look at the things that matter, integration, is going to be different in any scenario. So the key is, for us, is being purposeful about it, and to Craig's point, being transparent, and communicating. Yeah, we're not going to say nothing's going to change. You get to maintain, at NewChart, you get to maintain entrepreneurial, autonomy in a lot of areas, and in trade for that, you don't have to worry about some of the entrepreneurial challenges. You don't have to worry about cash flow the way that we all did when we bootstrapped our businesses. You don't have to worry about, where the foundational economics sit. Some of the banking stuff. Some of the, there are pieces that get much easier, but we still have to continue as entrepreneurs to do the hard work of enrolling our team. And sometimes that's enrolling our teams in the change, itself. And so the private equity component of it, is really based on what's the relationship between the private equity group's motivations and what the model looks like in the organization. And I've talked to Rich a number of times about what I've learned about private equity over time, and the thing that's key is that we all look at control sometimes as the ultimate thing that we need to keep, but the reality is, in my mind, control is overrated. Alignment's not. And so finding alignment between a specific, investment thesis, whether it's private equity, whether it's something else, if you know how everybody's going to win moving forward and in the long term, that's the most critical thing, in it. And so private equity becomes this kind of, taboo topic or the elephant in the room or things like that. It doesn't have to be if you have the right value thesis moving forward and everything is aligned there.
And I'd like to just add one thing. It's like, if someone's going to go through, hey, I've got a great MSP, I want to buy another one and bring it in. You can't be intentional enough about what's going to be the resulting outcome. But where you see it go wrong is growth stops during that integration, right? It's like, because what do you have, right? What's a typical MSP? Founder-led sales. You have the founder that manages a lot of that. And when they come together, the founders are both so busy merging the companies, the growth kind of just goes flat. You got to just know that going into it. And I'd say just have a plan for addressing that. I'm not saying it's impossible, but, speaking of pros and cons, like that can be a con, but you can make it a pro coming together if someone stays focused on that.
You've already partially answered this question actually, but it's when MSPs hear private equity, I think they tend to have this one kind of blanket image in mind for what that, and it's a very roll up heavy kind of model. And but New Charter and Evergreen are both proof that there's actually quite a range of different alternatives out there. So just kind of paint a high level picture for folks in the audience here about the different options, alternatives, models out there in private equity that they might want to be evaluating.
Yeah. Yeah. Private equity, like I said, is not a one size fits all thing. I think some of our perspectives on private equity come from what we've seen in the vendor space too.
Yeah.
And that's more prevalent, it has been, money's been in that space longer than it's been, in, the direct MSP space. There are a couple of things that we encourage people to look at when they, are evaluating the situations. Cash isn't capital might not be as, available as it was, but there's still a lot of it out there. Like that's not the issue, in these spaces. It's, and ultimately any investor, their job is to turn money into more money. And so you can do that through different models. And so the thing says, understand the model, but there are some private equity groups that come in and they have a playbook, and the big private equity groups all have a playbook when they acquire a property, and they run that playbook, and that playbook by and large is going to work. And there's not a lot, on the massive scale. I think where it hasn't worked in some of that is, we're service businesses and we're people businesses, and playbooks that work for software organizations or, more, just maybe more capital heavy, industries, are different than ones where the product is the people, serving the people. And so I think that the uniqueness of the New Charter model centers on the fact that there's not a lot of private equity out there that understands that. There's obviously some, but what's funny about trying to give each other a hard time, like our leadership teams, know each other, our investors know each other. Our success, like we will be more successful, and our investors will be more successful on both sides if we're both successful. And so that's the other piece of this, is that the models that are the right ones, we all want to, to see all of it work and grow. So understanding that, some of the private equity, question for me is, do they really understand what drives the service business and what the value chain is, around that? And is there a playbook going to apply well to that? Or are they going to invest in our playbook? And that's ultimately where we are, is that we built the playbook around this stuff, and we're continuing to evolve that. And that's what future investment, looks like, that we're building a company forever, and, investors, are people who will get money, put money in and get money out, but it's a bit independent of the thesis for how we build it, move it forward, which is extremely important in this industry, I think.
I agree with you that people get this preconceived notion of what private equity is based on the vendors they work with, or watching their own customers get acquired and go away. They just think that's what everybody is. And, as in the IT nation, really since the beginning, and I saw this first wave of private equity come into MSPs probably a decade ago, and where they're buying them up, and the founders were leaving and they're mashing them together, and then they were failing. And it's like, yeah, the business just left.
Right, exactly.
What you just do. These companies weren't mature yet, and this whole community is matured now, that you're finding more founders that have good succession plans and they've got people. It's not as what it was, but I think there was a lot of learning there. And then you had companies like Evergreen pop up. I think we got our start in 2017 and said, we're going to do it different. We're going to buy and hold forever. We're going to retain brand, people, keep leaders if it works, place leaders, a lot of different options there. But I think we're up to like 80 companies now, and we've got a mix of a whole bunch of leadership scenarios. We have founders still in, we've got founders that have been promoted up to regional leaders. We've got new placed CEOs, new placed operational officers, CFOs. Like, we have a whole mix of it. It's like Peter's saying, there's so many different variations to it. So if you're looking to sell, or you're getting contacted maybe by a buy side agent or a broker, or you're working with someone to sell your business, so there's a lot of options out there. Find which one fits the best. Because I think what none of us want to see is someone regretting that decision, because the business that's your life, and you've spent your life doing it. You took time away from your families to do it. I think the thing that pains me the most is when I see someone go through the deal, may have regrets. They're getting contacted by customers saying, ever since you left and sold, this is not good. And you have employees calling saying, they got rid of me. And there's no worse feeling. So it's just good to, whatever fits. Or there could be somebody that's like, no, I mean, I've met people that said, no, I want to go through a part of a bigger roll up. Like, I want to have the potential to be a CEO of an empire. Tipping my hat to the empire builder mode of ConnectWise. Like, there's people that want to do that. So everybody's got a different journey that they're on. And I think that's what makes this so fun.
Yeah. And the reputation piece is so important, because how many companies can you really acquire if the message gets out there that people will regret doing it?
Right.
That's, and you can trace that back, like, again, to, it's the same value chain, customers, employees, entrepreneurs, and we joke sometimes that, there's two types of investors in the MSP space: people who, don't know how to run MSPs, and people who know that they don't know how to run MSPs, and so there's a different trust factor in that, in terms of, are they going to come in pretending that they know this world, or are they going to be able to add their experience, and their capital and their knowledge of all of these things to our knowledge of what it really takes to, to do this. And to Craig's point, that's where it gets real fun.
Yeah. We've been talking in the last few minutes a lot about, the things that can go sideways, and how to prevent or avoid regret.
Mm-hmm.
And, I found, being certified in post-merger integration, that a lot of times, if we don't have all of the objectives and the, the goals mapped out, laid out correctly during the deal structure, and we fail to integrate rapidly, and I'm not talking about brands and things like that. I'm talking about the core stuff where we're looking for synergies in terms of, platforms, HR and payroll, financial systems, maybe service platforms and things like that, right? The stuff that doesn't, and achieve hit some goals, early wins for the team, that we tend to find more of that regret. And it has to all be delivered, as you both kind of alluded to, while we're doing business. Like, we cannot stop day-to-day operations because we are integrating, either we're acquiring someone or we're being acquired, right? So all of that has to work, pretty effectively, to give the teams kind of this, okay, we're winning, we're actually moving forward. It's not, this unwieldy burden that's crushing us, and we're getting these success stories. And so what should MSPs ask themselves and potential buyers regarding that pre-planning conversation? Like, what are the goals? What are the synergies? What are the objectives that we're trying to reach? And then how quickly can we integrate, and what impact, should we expect for day-to-day operations? Because ultimately, what we don't want is for customers to start souring and getting fearful. The employees, number one, right? We don't want churn. We want to support them and build their confidence. This is a good thing. And, with all these different, things that have to happen. So just, this is kind of a wide ranging question, but what should MSPs ask of themselves from their readiness perspective and desire to move forward? And if they're being acquired, what should they be asking the buyer? in order to make sure that they're making the right decision and hopefully not having regrets after the transaction?
I'd say deal structure. But if I'm zooming way out, like I'm a big fan of this Simon Sinek, start with why. I just always tend to let's start with why. Why do you want to do this? Why do I want to be a part of this? Let's get that on the table and make sure we're both very clear with each other and upfront what we're doing there. But deal structure becomes real important. Everybody does it different. How much cash is there? What's the earnout period? Is there going to be equity? Is it just going to be all cash? And outcomes, like lay out all the outcomes. What's expected? What are the outcomes we hope to achieve from this? When they're going to happen, or like what's the growth we're expecting to happen here? Man, you're right. This could be a lot, but that's where I would really start. We can get into a million details from there, but I always start with why, and then all the expectations out there and outcome driven decisions for sure.
I think for me, I would say people should ask themselves what they want to do next, not what they don't want to do. Sell your company because of what you want, not because of what you don't want. That's going to change your outlook pretty significantly on, where, how, what path you take, things like that. It's exhausting running an MSP. It's stressful. If you've been, so sometimes it feels like you've been on call for 20 years. There's a lot to not want, and to look aspirationally at a bigger opportunity and say, oh, the grass is greener there, but you could easily be just selling short, of what the potential is, or selling into the demise of what you spent so long building. If you're not looking at, and the identity crisis of the selling entrepreneur is very real. And so that's one of the easiest ways I've seen to understand where you're at is that, are you truly more excited about what it does mean than what it doesn't? The thing that I think you ask, that they should be asking the organization is, don't ever fall for, if you're selling to a group who's trying to tell you that nothing's going to change, they're liars. Or they have no experience in doing this. The reality is that things change. It's how they change that provides the value. And there's trade-offs in that. We integrate financial systems. We have to. That's part of our model and how we set up to bring value. Is it a fun part of the process? Not usually, but we can't run a $300 million company on QuickBooks. And so there's trade-offs there, but then the benefit that comes with that is what you should be asking for. So dig in, understand what changes, and make sure that you can have some really honest, psychologically honest conversations with people who have been through that with that group, and hey, what are we love to air our dirty laundry, to incoming companies, because it only helps them come in differently. Either they see a reality of it, or they see what we've learned through. They can, we can have those discussions that are based in reality. So whatever you have to do to get out the reality of what it's going to be like in the change afterwards is critical. And to the point of, what is the actual impact, in terms of, timeline, it really depends on what your thesis is and what you're building the integrations towards. But I completely agree with you, Eric, that don't dance around it and don't tiptoe into it. Decide what you're doing and do it.
Yeah, no, this is great conversation and feedback, Peter and Craig. This is so valuable. I just have one last question for you both. And, it's that it goes back to that introspective, looking at myself in the mirror as an MSP that's built something that I feel has value, and deciding, should I sell now or should I wait? That's the conundrum, because, in many cases, I know you guys do this all day, every day. MSPs sometimes think that their companies are worth a lot more than they actually are once you put them through the analysis, right? Through the assessment, right? So we understand that. But, what are some of the things that you would share with MSPs that are thinking about when it's the best time for them to look sell their companies.
Well, yeah,
Loading you guys up. Loading you guys up today.
Yeah.
Go ahead.
Well, look, I mean, I'll tell you, I've seen people sell their business in their 30s, in their 40s, in their 50s, and their 60s. Everybody's different. There's the person I've been running hard for 20 years. I'm 40 now, and cybersecurity risk is too much. I'm going to take that weight off my shoulders. I'm going to sell now. There's the people that have a financial target they have to get to in order to do it. There's the people that are going to be done when they sell, so that target becomes more important. Or there's people I want to go on and there's a lot to it. But this, I have to laugh because this reminds me once, used to say, hey, this is the path to success. And someone asked me, oh, what's success? And I'm like, wait, I can't tell you what that is. I feel like it's kind of a similar question. Just know that it all shapes, sizes, and flavors are out there. Why someone sells.
Yep.
So let me tweak it a little bit, because what we want to make sure that we do in this conversation is to share with folks, you don't want to have to sell because you weren't prepared. Because we've all heard horror stories, right? Something happened with family or friends or health or something like that, and somebody had to get out because they could not operate a business anymore. And at that point, the valuation, it was nowhere near what it could have been had they taken steps to identify some of these things. So maybe I'm giving you a more focused way to respond now. But what do you think? What would you say when I say, look, it's kind of like, don't accidentally have to, just yard sale your company, right?
That's a great point. And I think that it does narrow it down a bit. Selling your company or any transaction, it's a step in an entrepreneurial journey, or should be a step in an entrepreneurial journey, not the conclusion of it. And it's where New Charter, and Evergreen are alike. We might communicate it, a little bit differently, but at the end of the day, investors themselves need to get a return on their money, and they need a mechanism to do that. Whether that's in, private equity group, outside of this Evergreen, New Charter, it's the mechanism of what we're building that should sit above that, if we're doing it effectively. And I think that, bootstrap MSP owners should look at it the same way. That if you can have an opportunity to choose the timing, and to Craig's point, it's where 1,000 things line up, and ultimately you make an entrepreneurial decision. And it's not the conclusion. It's not the point that you get into it and just say, well, I have no other option. I need to retire next month. Give yourself the runway for what's next. Give yourself the runway, to be able to shepherd it, into the future, if that's the entrepreneurial decision that you want to make. Let the investors, and make sure that what you're investing in, because you're investing your business in the future of that, is something that's going to have longevity, that the thesis, is going to live on. One thing that I say to people a lot is, do not believe that the lie a lot of us, tell ourselves that, the initial transaction is the end of the ability to capitalize on an investment. That's something, I think a lot of it, is, as we look at, reinvestment and things like that. I now have an opportunity to attach some of my reinvestment to people who have proven year over year, platform over platform, that they know how to make money, and I can shepherd my people, I can shepherd my clients that way, and I can capitalize on the fact that my value creation, has increased more rapidly, in a platform than it would have on my own, and I think sometimes that, you look at it, all that to say, it's easy to sometimes look at the conclusion, or the transaction as the conclusion of the journey, when it really should be just a step in the journey.
Peter, I love that. I love that analysis. That's a step in the journey, not the conclusion of the journey. That makes me think differently. Craig, you want to tag back in with anything you'd like to add? I know I kind of tweaked the question.
That's great. I mean, I love what Peter said there. I hadn't really thought of that either. Like it's just another step in the journey. look at how many people sell their business and go on to be EOS coaches, or some have moved into working with some of the big SaaS vendors in our space. Or some have said, I'm going to get focused on my family. That's the next part of the entrepreneurial journey, is giving back to them, right? Yep. The personal thing. And I think, Peter, did you ever go through one of those life plans that IT Nation Evolve does?
I didn't do it, in Evolve, but I've done something similar.
Yeah. That's something I would add, I guess, is outside of the business stuff. Like, we're all people. Like, businesses are people. And whatever RPA is and robots, still people. I keep asking, where are they keeping the robots? I don't see them. But I think that life plan is a great thing to do. It really helped me, and it will, make sure you don't catch yourself off guard.
Guys, really, really interesting conversation. Like Eric said, very, very valuable for us and also for the audience. And so thank you so much, both of you, for joining us, giving us so much of your time. No blows traded, so bonus points for that.
I was waiting for the time when we were checking the gloves off.
Yeah, no.
I had to remind Craig that they might have 80 companies and we have 25, but there's 32 Major League Baseball teams and there's a lot of minor league baseball teams.
Yeah.
So, I just wanted to remind Craig,
We'll take that up at the hotel bar at the conference. That's where a lot of the great conversation happens, and it comes down. We'll see what happens. I know that Jason McGee's got a lot of photos of the two of us trying to.
It's true, like trying to stir up stuff.
He tries to provoke us into getting into something. But we'll save it for then.
Yeah, I love it.
We really appreciate you guys and your conversation. Thank you so much.
Yeah.
Peter, for folks in the audience who want to learn more about New Charter, follow up with you, where should they go?
newchartertech.com, or get me on LinkedIn, or come to the hotel bar with Craig and I. We'll rock, paper, scissors for who gets to talk to you.
So in addition to the hotel bar, Craig, where should people go to learn more about Evergreen and get in touch with you?
Yeah, Evergreen SG, because it's Evergreen Services Group, evergreensg.com. Or you can email me, cfulton@evergreensg.com. Happy to chat anytime. Anybody tuned in.
Fantastic. Right. Thank you both so much. Folks, we're going to take a quick break here. Eric and I will be back in just a moment with the final part of this episode of the show. We'll trade a few final thoughts on this conversation, maybe have a little bit of fun. Stick around. We will be right back. Okay, and welcome back to part 3 of this episode of the MSP Chat podcast. What fun, Eric! If you're into managed services generally, your M&A, to get a chance to pick the brains of those two gentlemen is kind of a blast. And there was actually a point in the conversation for me, Eric, where they were talking to each other about managed print and VoIP and so on. And I don't know about you, but I was like sitting very still and not saying anything because I just wanted to be a fly on the wall and really just kind of listen to them engage in some shop talk. So just a very interesting, informative conversation about a topic that always is and always will be top of mind, and rightly so for MSPs.
Yeah, Rich, you verbalized exactly how I was feeling. Is like, oh, this is like they're just like, this is them talking to each other and comparing notes. And like you took the words right out of my mouth. It's like, oh, flies on the wall, just listening to this kind of like inside baseball. And I loved the back and forth, a little bit of the, friendly sparring that was going on there. But boy, oh boy, did we, get a lot of gems from that interview. And, Rich, I'm sure you feel the same way I do. We could have just kept that conversation going and captured hours of valuable content. So I really appreciate them coming on and sharing their insights. But holy cow, I think my takeaway is that I like the biggest takeaway was the idea that an exit is just the next, just right before the next step in your entrepreneurial journey, not kind of the end. That we kind of think like, hey, we're going to build a company, and we're going to put in all these, years, and then we're going to exit, and we're going to retire, and life's going to be beautiful. No. That's just it. That's one step. And, Rich, you and I both know entrepreneurs that have done it over and over and over again, and just appreciate, the energy and the excitement and, the trials and tribulations of building something new. And you learn, right? Every time you do it, like you learn from your last exit, you learn for the next one. And it seems to me that the folks that have built multiple companies and exited successfully each time, every new one is a little bit faster to market, a little bit and more valuable, because they've learned from that. So I really appreciated that part of the conversation.
Well, me as well, and very much appreciated their time. The two of them are very good sports, by the way. Part of what I was doing when I invited them onto the show was trying to reveal or call attention for our audience to the fact that don't just think of private equity in particular as this one thing. There's a whole range of potential acquisition partners out there, but I honestly, Eric, it did not occur to me. I just thought these are two really smart, experienced guys who will have interesting things to say. It didn't occur to me that they have a very similar business strategy and are kind of competitors. And so I thank them for agreeing to come on the show and being such good sports and having a good time with us and with each other. Again, it was a really great conversation.
It was. Thanks to Peter and Craig, and thanks for offering to buy us drinks at the next event we see them at.
Yeah, which for me is going to be next week. So yeah, I'll be cashing in on that. Absolutely. Well, folks, that leaves us with time for just one last thing. And, Eric, if I wanted to, I could fill this segment of the show every week with some lottery-related human interest story. I mean, these literally break every day. If like me, you're kind of poking around online for interesting stuff to talk about on the podcast. This particular one, for some reason or other, though, just sort of jumped out at me, because it concerns somebody, a woman in Virginia who went to a restaurant, got a fortune cookie. There were numbers in the fortune cookie. She played those numbers in the Powerball and won $50,000. And I'm thinking to myself, what are the odds of winning a $50,000 or better prize in a lottery period? And then what are the odds of winning with numbers you found in a fortune cookie? Now, strictly speaking, I'm sure anyone who understands statistics and probabilities better than I do would say, well, the odds are exactly the same as any other combination of random numbers that you... But somehow to me, Eric, it just feels like I opened up a fortune cookie, it told me to play these numbers, and I won $50,000. Huge long shot.
Right. I mean, you can just imagine, the headlines the next week, fortune cookie stocks soar through the roof as everybody goes and buys so many more fortune cookies that, restaurants are running out and ordering more and more. It is unusual. I had a very similar experience when I was younger as a child. I did not play numbers that I was given, and those numbers hit. So I regretted that. But you know what? It's, you can't bet on that every time, right? So very interesting. So that woman probably frequents that Chinese restaurant. Is it a Chinese restaurant, or wherever she got the fortune cookie?
Yeah. The interesting thing
I'm gonna
is
repeat customer now.
Yeah, absolutely. But one of the interesting things is the article isn't very specific about where she got the fortune cookie, and she might be trying to corner the market. This might be her secret place to get winning Powerball numbers, and she doesn't want the rest of us to know about it.
I'll bet you'll see some ads for a new restaurant in that publication soon, as they bank on people coming in to get the winning fortune cookie numbers from their establishment.
Okay, well, folks, thank you so much for joining us on this episode of the MSP Chat podcast. That's all the time we've got for you this week. We're going to be back again next week. We are both a video and an audio deliverable. If you are listening to the audio version of the podcast, but you'd like to check us out on video, you will find us on YouTube. Just look for MSP Chat or the Channel Master channel there on YouTube if you are actually watching the video. But you are also someone who consumes audio podcasts. Go to wherever it is you get your podcasts. Spotify, you name it, all the places that distribute podcasts. You're going to find us there. And either way, YouTube, an audio podcatcher, whatever it is, please take a little extra time, subscribe, rate, review. We really appreciate it because it's going to help other people who might appreciate the show to find it. This program is produced by the great Russ Johns. Russ is part of Channel Master. He would be happy to do a podcast for you if you'd like to learn more about Russ, you'd like to learn more about Channel Master and the work that we do with our clients. You can find information about us at www.channelmaster.com. By the by, we have a sister organization called MSP Mastered, which works directly with MSPs on improving their business, and you can learn more about that company at www.mspmastered.com. So once again, we thank you so much for joining us. We're going to be back in a week with another episode of the show. Until then, folks, please remember, you can't spell channel without MSP.